Alright, good morning, good morning. Thank you guys so much for tuning into today's live stream. It is June 30th, 2025. And to begin today's live stream, I do want to take a look at the economic calendar here for today. So today we have not much. Chicago PMI, and we have FOMC member Bostic and Goldsby speaking today. Nothing too volatile coming into today's markets. And so, because, it's the first day of the week and the last trading day of the month. So, I'm not really anticipating much. Let's take a look at the technicals here for the morning. So coming into today and this week, this was my objective. So that is the weekly candle, and this is the daily candle, right? And with the way that we closed here on this weekly candle, my assumption coming into this week was that we should most likely take out the weekly high. And coming into the London session today, we took out the weekly high and we also took out the daily high. Knowing that we just took out both of those highs, that means that I don't necessarily have a weekly bias anymore. I wouldn't say weekly bias, but I don't necessarily have a weekly objective anymore. I don't have a weekly objective, nor do I have a daily objective, right? And so, coming into the morning session today, because I can't utilize the daily time frame and the weekly time frame, I would elect to use the intraday time frames, such as the 1 hour, the 4 hour, the 6 hour, the 8 hour, or the 10 hour time frame. Those time frames will give me an objective, right? I can apply the same high and low concept to every single time frame. One thing that I do want to mention here too is take a look at how we closed here on this daily candle. We created this daily fair value gap, and if you guys were paying attention last week, this fair value gap here is to be treated as a breakaway gap. The reason being is, so it takes three candles to create a fair value gap. Alright, so there it takes 3 candles to take a fair value gap. Yellow, orange, and red indicate. Yellow indicates the first candle, orange indicates the orange. Orange represents the second candle, and red represents the third candle. And I want to draw your attention towards the second candle's high, which will be a blue line, and the third candle's closing price, which will be I would make it a black line. So, and let me get rid of the 3 lines here. So, the fact that the third candle's closing price is above the second candle's high means that this daily fair value gap here, I will have to treat it as a breakaway gap. Meaning, once we open up on this daily candle, or once we open up on the new daily candle, we should not rebalance into this fair value gap. This is a breakaway gap. So we should open, and because we have to treat this as a breakaway gap, because we have to I guess, yeah, because we have to treat it as a breakaway gap. I don't want to see prices attacking the low. Either we could take out the daily high, or we could consolidate. Like I said, I don't want to see prices trading into or rebalancing into this daily fair value gap here. This doesn't make sense for us to do so. I mean, we can, but objectively, if we apply this objective theory to it, then I don't want to see prices rebalance. But sometimes we can. It's just most of the time, whenever it's like this, the fair value gap is going to be treated as a breakaway gap. Let's take a look at this fair value gap here, right here. Another daily fair value gap. That blue line is the second candle's high, and the black line is the third candle's closing price. Notice how the black candle or the black line is above the blue line. That means the third candle, we closed above the second candle's high, and so I would have to treat this inefficiency here as a breakaway gap. That's exactly what I did. And yeah, so coming into today now, the fact that we have already taken out the daily high means that followed the rule set, right? And yeah, that was another confluence for why I wanted to see previous week's high get taken. Is because whenever I zoomed into the daily time frame, I noticed that formation had occurred where the daily fair value gap had to be treated as a breakaway gap. And yeah, so now coming into the morning, I would utilize the 4 hour, and I would utilize the 8 hour. Depending on how those two candles closes, that will give me my morning objective, right? If this 4 hour candle and this 8 hour candles closes bearish, then I will be targeting the 4 hour / 8 hour candles low. But if we were to close bullish, then I will be targeting the 4 hour high and the 8 hour high. It depends on how we close here in about 22 minutes or so. Before then, I would like to just sit on my hands and wait. And yeah, so that's kind of what I am considering coming into the morning session today. I don't necessarily have a bias just yet. Like I said, I'm going to wait until the 4 hour candle closes and the 4 hour candle closes for a morning objective. And I do want to draw your attention here towards the monthly time frame. So the monthly time frame here is this candle, and there's a 6-month time frame also closing here in about 7 hours or so. So this 6-month candle and the 1-month candle, those are pretty higher time frame candles, right? It requires 6 months of activity for a 6-month candle to be created. So it took a lot of time for it to be created, but yeah. So once these two candles closes, the 6-month time frame and this 1-month time frame, that will give me a 6-month objective and a 1-month objective. And with the way that we are closing here on the monthly candle and the 6-month candle, to me, I can anticipate the idea that we should take out the 6-month high and the daily and the monthly high. But notice how the monthly high is the same high as the 6-month high. The fact that that is like that, I have to treat the monthly objective as the 6-month objective, or vice versa. I would treat the 6-month objective to be completed within the next 1 month, right? And yeah, so that's just something that I do want to draw your attention towards. The fact that we are closing right now on the monthly time frame and the 6-month time frame could force us to have a little retracement back into the dealing range, but who knows, we'll see. But yeah, so that's just something that I do want to draw your attention towards, right? Is the fact that once we close on the monthly candle and the 6-month candle, we will have a new monthly objective and a new 6-month objective, and that we are closing pretty bullish. And because the fact that we are closing bullish means that I am anticipating a continuation higher coming into tomorrow and the next month and the next 6 months until we take out that respective objective. All right. That's pretty much all I have for the analysis coming into today. I think it's best for me to just do some recaps over the pros and cons here now, just to get an understanding of where we should be trading, or not of where we should be just to recap. Just to recap. So the pros and cons from the week of June 23rd and June 27th. What are some things that I should continue to do? Well, the first is to require a higher time frame objective, a model, and a entry pattern, preferably a fair value gap, before any executions. This forces me to take consistent setups. If I don't have one of those components in my setup, then I just can't execute the trade at all. So consistency is key. And how am I going to be consistent? It is to require those 3 components every single time I execute. Second is to pay close attention between NQ and ES. Just watching SMT, I do want to draw your attention towards this fact here. So right now, NQ has taken out all-time highs, whereas ES has not taken out all-time highs. The fact that there's an SMT right now, the fact that ES hasn't caught up yet, means that this could allow for a short-term reversal. I'm still anticipating the idea of higher prices still, but the fact that we have SMT right now allows for a reversal. But like I said, I'm not gonna call a top here. It's just because of the SMT, there's a possibility of a reversal. And yeah, so just coming into this week, I have to be really attentive for SMT. Lack of SMT indicates a potential continuation. Presence of SMT indicates a potential reversal. Notice how I say potential. It's not a guarantee that we will reverse in price if there is SMT. It's just, it allows for there to be a reversal. And the third thing here is to utilize all time frames. Know how to pivot from each time frame to another. like coming into today for me, the fact that I can utilize, or the fact that I declared to utilize the 4-hour candle and the intraday candles instead of using the daily candle and the weekly candle makes sense. The weekly objective and the daily objective has been completed already. So there's no reason for me to continue to pay attention, or I guess pay attention to the daily time frame. There's not as of right now. Until there's another daily candle that closes, I wouldn't really be forcing anything on the daily time frame. I would shift and pivot my objective onto from the daily and the weekly onto the intraday time frames. And so that's the third pro, is to utilize all time frames. Last but not least is to be patient. Don't force things to happen. Allow the setups to come to you, and once they present themselves to you, that's when you take advantage of the opportunity and execute, right? I don't want to force any setups to happen for the fact, simply based on excitement. I don't want to do anything irrational, right? Be patient with my approach and calm. And I think that's pretty much all of the pros and cons. One thing that I do want to work on is whenever I am in a setup, whenever I am in an execution, I want to watch really closely of how we treat the consequent encroachment of a fair value gap. Consequent encroachment is essentially that line, that midpoint of a fair value gap. So that line right there, that blue line, would be the consequent encroachment of a fair value gap. So I just want to watch closely of how we treat the midpoint of a fair value gap is essentially what I'm saying. Some improvements here coming into this week. First, consistency. Consistency is my number one value, right? I want to be able to take setups where I can, whenever I do recaps over them, it almost seems like deja vu. Every single setup should appear and have the same structure, just a little bit of different details and time frames, but I want them to all have the same source of of structure and consistency. Second, watch closely between the relationship of NQ and ES. Watch for SMT. SMT shows you when and where there has been manipulation between those correlated assets. Third, be calm, be patient. Like I said, I don't want to force anything to happen. I just want to be prepared, and I want to be able to execute whenever the opportunity presents itself. Fourth is to track every single one of my executions, record how I process information whenever I am in a trade. There's no need for, I want to see how it is, but yeah, just for me, I just want to be able to journal and track every single execution of this 10K journey. And with that's going to wrap it up for my pros and cons for today. We have about 10 minutes left or so until the 4 o'clock, the 4-hour candle closure and the 8-hour candle closure, depending on how those two time frames will close. That will give me a morning objective. And so that's gonna be all for right now. I think I have about 10 minutes left of just free time. until we do so. So I'm gonna go into maybe a chess game or something like that, and I guess warm up the brain. He wants to attack my bishop. Honestly, I don't know why I did that. I was... Okay. If I go here, he's just gonna go here, but... See if I go here. I think it's fine that he's pushing this side. I'm gonna castle... Oh. Should be chilling. He can't really okay. I think that allows me the opportunity to... Actually, I'm going to castle first and then go here. Huh. Oh my gosh, I did not mean to... Bro, I've done... That's 3 mouse slips. I did not mean to do that. That sucks. That literally sucks because I meant to take it, not... Oh. You live and you learn. You live and you learn. Maybe I go here. Interesting. I have this threat here now. This bishop. Awesome sauce. Let's see, can I do anything else besides that? I just take that. This side is really weak, so if I castle that way, I think I should be fine. If I go here, I just want to move my queen here so I can protect this square. Alright. Go here. Probably castle. Look for an opportunity to castle here. Because he has 4 pawns on this side. Maybe, oh. Maybe I can't castle this side anymore. Well, I have this bishop protecting here. Okay, well I have to castle here now. It's fine. I think that's fine. 3 minutes left until the closure. Probably look for something like this. Here, I go here, he's forced to go this way. Or block. Yeah, he's not forced to do anything, but if I can just trade pieces with them, I think I should be fine, honestly. I just want to force trades to happen. Because I'm up pieces right now. I'm up a rook. The fact that I am up a rook means that I can like do these. I go here, attack his queen. I should probably get this punt up. I think this is where I should start. Actually, I'm gonna go here first because I don't want to have him trade this and then I open up my pawn structure that's protecting my queen or king. I think here probably I can go here. I think that's an easy choice. Just here, just rotate. Give him a check day here, maybe. Attack this pawn. Alright, now you just give yourself that. What pin I'm here? That's a pin. I go here. Interesting. All right, there's the open of the 4 o'clock. I keep saying 4 o'clock, but 4-hour candle closure. Here's the 4-hour candle, and this is the 8-hour candle. With the way that these two candles close, I can't really bet on the idea of us taking out the low. Or I mean, it did close bearish, right? We did close down close candle. Let me see if we are within the range. Okay, so I'll make this argument that we should take out the 4-hour low. But looking at the 15-minute time frame, we have to respect this 15-minute candle or this 15-minute fair value gap for us to target the 4-hour low and the 8-hour low. So that's kind of what I would kind of aim for coming into the morning session today. I would look for the 4-hour low. If we respect this 15-minute fair value gap, if we don't show signs of respect to this 15-minute fair value gap, then I am not going to force the idea of lower prices towards the 4-hour low. I want to see us respect this inefficiency here if we are going to continue lower. And yeah, so that's going to be my morning objective coming into today. I think that's going to be all for me, to be honest, right? And yeah, I don't want to force anything unless there's something that's telling me that we should be continuing in a specific direction. I like the idea of lower prices, but like I said, this will confirm it for me. If we can get a bearish 15-minute candle here after rebalancing into this inefficiency, that will give me a confirmation that, hey, we should be continuing lower. And if we do continue lower coming into today, watch for how we react if we can get into the discount of this dealing range. If we can retrace back into the discount of this dealing range, then I would, yeah, I mean, the discount would be like another objective, but I have to see clear suggestion of lower prices. But yeah, so that's gonna be all for me coming into today. I kind of give you guys some guidelines for when I would like to see lower prices, and that's only if we can show respect to this 15-minute inefficiency. And yeah, coming into the afternoon session, you can utilize the 6-hour candle and the 4-hour candle closure here, and this 10-hour candle closure will close in about 4 hours. You can wait for those candles to close as well for another objective. And don't forget about the hourly time frame as well. Don't forget about the 15-minute, and don't forget about the 30-minute. Utilize every single time frame for you to be able to understand the full story. And yeah, I think with that's gonna be all for me for today. Thank you guys so much for tuning in, and until next time, be safe.